My name is Ethan. Yeah, please have a seat. Today we have two distinguished panelists. They both are serial entrepreneurs and successful entrepreneurs in the Silicon Valley, and they both are managing their venture firms. So it's my honor to invite them to share about the 2020 bubble or bust. Okay. So why don't we start with a simple self-intro from you guys? Like tell people like what do you do? Yeah.
Hi, I'm John Racioppi. I do a lot of different things. I'm a angel and early stage investor personally. I'm an LP in a small fund called Keto, not the diet, but a different type of keto. And I'm a mentor at F50. I also am a partner in a new startup that I won't go into details on. And finally, I am running a not-for-profit entity called One America Works, and our focus is on working with growth stage companies in the Valley to help them understand that growing in the Valley these days may or may not be a tractable problem, and there are lots of great people and great resources in other places throughout the U.S. that we can work with them to encourage them to take a look at seriously. So those are some of the things that keep me busy.
I'm Stas Khirman. I'm managing partner at TC Ventures. TC Ventures is a seed-level fund with specific focus on immigrant founders. And apparently immigrants for Silicon Valley, it's not only overseas, but people apparently coming from Iowa or Arizona also feels here not very different from people coming from other side of the pond, so we invest in these people as well. Previously, before my kind of venture part of the life, I co-founded a few startups in Silicon Valley. Some of them were successful, some of them not, so bubble or bust, it's quite, I'm familiar with both sides of the story as entrepreneurs as well.
Thank you. Actually, I just met Stas for the first time, and I just told him that when I was in Stanford, I took a very famous VC course, and my professor for that course is actually his partner of his venture firm. Yeah, so must be a good firm. Okay, so let me start with the first question. You know, the Silicon Valley venture deals was around $80 billion per year from like 2014 to 2017, but it increased to like $130 billion last year. However, we see another trend is that the number of deals was like 1,200 to 1,500 per quarter in those 2014 to 2017. However, it reduced to like 800 until end of last year, 2018 Q4. So it's kind of a mixed signal. So I want to ask you guys, like, how do you see this kind of trend, and what is your opinion?
Sure, I think that trend actually indicates that we're seeing a couple of things going on right now. First of all, there's still plenty of capital available, right? Capital is still very cheap. If you look at the cost of capital and the amount of capital available, there's plenty of capital. Yet the number of deals is going down. The way that I interpret that is that there's a flight to quality, right? That yes, we're still going to do deals, we're still going to invest, and I think that that's going to go on. As long as we have reasonably flowing capital at reasonable cost, we're going to continue to see deals funded. But I think that the number of deals is going to possibly get smaller yet, because those investment dollars are going to fewer and higher quality deals. I think a lot of investors are raising the bar for what they're looking for in terms of deals. So I think that trend is going to continue.
Every time I hear someone bring numbers and we're trying to kind of estimate some trend, it reminds me that my original profession, I'm a mathematician, actually in statistics. So there is lies, dirty lies in statistics. One of the issues with investment numbers, first of all, certainly, as you mentioned, there is a lot of available capital, and late-stage companies actually raising incredible amount of money. On the other side, early-stage company, at least what I see last 3, 4, 5 years, less and less going to venture capital, but getting money from angels. Actually, to start company, it became much cheaper than it was. It's all the time we see this trend going down, but lately, you know, even AI companies that require a lot of the computing power could do it on chip today, which wasn't even possible a few years ago. You know, everyone brings example of internet, how 20 years ago it cost $5 million to start internet company. It went down 10 years ago for about 500,000. The same happened in any other area. AI hardware companies to start became much, much cheaper. And people quite often, they're easy to get money from angels, from people who know them up to specific level, than to go to VC. And those deals usually not registered until company already raising substantial round A, round B. Frankly, I start see companies that going ready to round B without round A, which wasn't possible 10 years ago.
So are you still like optimistic about the investment scene in 2020? Like, are you think it's going to be positive next year?
I think it's going to be a positive year again. I'm at least cautiously optimistic on that level that, you know, we're still going to continue to see deals happening. And, you know, you look at, again, I don't want to go into politics, but if you look at, you know, where we're at in the cycle, you know, it's very likely that we're going to continue to see the Fed loosen, which means that, you know, cash is going to be relatively cheap. And if, you know, money has to go somewhere, right? It's not just, you know, people are not going to stuff it under their mattress, even at today's interest rates. So, you know, there is a lot of capital that is going to chase deals. It's just what's the nature of those deals going to look like. I agree with one of the earlier panelists that was talking about, I think, profitability is becoming, we're back to the future as far as that's concerned. I'm old school in that respect, in that when I make investments, I look at not only what is a company doing now, but what is their potential, you know, to be profitable. Do they have a plan that ultimately makes sense to me to have a path to profitability? You know, I'm investing early stages, so by definition, they're not profitable yet, but I want to see a viable path towards profitability. So I think we're going to see more and more of that trend as well.
In general, I agree, but you know, every X years there is a cyclical economical economy cycling itself. So it's yes, we could be optimistic, but not 100%. It's unfortunately even on early stage startups that need few years to get to the market. They feel very strongly whatever happened in global economy. And if global economy something happens with it, it's not going to be good because venture investments, first investments that usually cut it down by institutional.
Okay, thank you. John, you mentioned about politics, and Stas, you mentioned about global economy. Actually, this morning, we have some media from Japan. You know, the NHK was here trying to interview people about their opinions, you know, like the geopolitical impact in Silicon Valley, like, you know, the trade war between US and China. So how do you guys think about that question?
That's a really difficult question to answer. I guess I would say this. Again, I'm cautiously optimistic that at least the major issues are going to get resolved. And I think it's because both sides of the equation needed to be resolved, right? I think, you know, again, whatever you think about the current administration, I think it's in their best interest to see this resolved because they want to see a growing economy. And I don't think they're stupid, right? I think that they understand that, you know, trade war, you know, potentially is going to have a negative impact on our economy. And certainly on the other side of the equation, I think, you know, the Chinese also understand that they need to have their economy continuing to grow, and a trade war with the US does not benefit them. So when you look at the fact that you've got sort of mutually aligned goals in terms of keeping things moving forward, I am optimistic that things will get worked out it'll probably take longer than we all expect.
Yeah, actually, I'm also very optimistic on US-China issues because it's mostly pure economical dispute. But you know, it's very interesting that it actually happens both positive and negative side over the last 10 years, especially in high tech. It's became global. Today, when we're talking about Silicon Valley, we're talking about global Silicon Valley. We have people with different accent. My accent is still here after 20 years. And also because we're investing in immigrant entrepreneurs, we see both sides, positive and negative, of everything what happen in international relationship, not economical. Actually, economical issues easier to solve than political. For example, US-Russia relationship, they harder to solve because they're not economical. They're ideological, they're political, and so on. So on one side, certainly it's created a lot of the problem. On the economy, probably it's not influenced so much as on the people, but on the other side, we have more and more smart people coming to Silicon Valley and staying here. So it's, you have negative side and you have positive side. Is it good for US economy? At the end of the day, when more smart people coming, it's probably balance the negativity of the some decrease in the economical side. So each and every conflict they have to look, actually, I do expect it going to be substantial, unpredictable changes just in few days when United Kingdom going to leave United Europe. Nobody knows what's going to happen, but it's probably going to be, it's again, for me, it's less solvable problems than US-China issues.
Yeah, I agree with you that the economic issues that we face are, I think they're more tractable, right? I think that they can be solved. I'm not saying they'll be easy, but I think that they're solvable. The philosophical problems and philosophical differences between countries, I think, are a little bit more complicated and, frankly, probably more intractable, at least in the short term. So, that does make it unpredictable, because what, does philosophy trump economics or vice versa? Depends. Depends on who you talk to. I'm not sure.
I have originally communist education, so we're saying that economy define everything in long run. But problem is that our life is pretty short, so maybe we cannot see when economy will influence it. But actually, Europe going to be again very interesting situation between US, UK, and Europe, and everything is going around. By the way, it could be very interesting. Again, as someone who built multiple startups, my advice for founders: look on challenges and big problems that are going to happen, because for you it could be opportunity. So yes, there is a tension, international tension between countries. Think how you could use it.
I guess I would add one other thing, which is, if you're a startup and if you're, again, getting yourself off the ground right now and you're raising funds, I think my advice would be, get as much capital as you can get your hands on right now, run lean, run mean, because despite the fact that I think capital will be available next year, it may not be. I mean, I've gotten out of the prediction business, right? It's a difficult business, to be in, and I could be dead wrong about that, right? And capital could dry up, and I'm old enough. I suppose this is the only advantage of getting old, is that you've seen things before, and I've been around through the 2000, 2001 bust, obviously the 2008 bust. So I've seen this movie a few times before. I think many of us in the room certainly have. And we have the advantage of knowing that, there's a lot of patterns that you can look at here. And, all I could say is that prepare yourself for the situation where capital won't be available. So run lean, run mean, preserve your capital, and spend it wisely. So.
Completely agree. In my personal practice, you always need twice more than you expect. So if you have money that you plan for 12 months as an early stage, budget for 24 and try to find funding for
Yep.
it.
I've personally been through about 8 startups myself, had 6 exits, a few of them very successful, a couple of them okay, a couple of crash and burns. And you know, if I've learned one thing, it's things always take longer and cost more than you expect. And I can't even tell you exactly why, but it just does.
Yeah, so thank you very much. So since we are running out of time, so do you have like one final thought you want to share with the audience today?
Sure. I guess I'll answer the question that was posed as part of our panel here is, are we in a bubble or are we in a gold mine? And I would say that we are definitively in a bubble. I will state that with 99.9% certainty. The only thing I can't tell you is, where are we in the bubble? Where is it in its cycle, right? Is the bubble 2 days away from bursting, or is it 2 years away from bursting, right? The one thing about bubbles is they are, by definition, very unpredictable. So it's really hard to know exactly where you're at this point in time. To me, it feels like we are in the late stages, right? That we are closer towards something bursting than continued growth for the next 5 or 6 years. We know that the economy always goes through cycles. That's historical fact. You don't need to be an economist to know that. So it's just we've already exceeded my own personal expectations in terms of how long an economic expansion can occur. So if I were betting, I would say that we're more likely towards the end of this cycle than the middle or certainly the beginning of it. We're not anywhere near the beginning. So for what that's worth.
Probably yes, but to end on positive note, let's not forget, the biggest and most successful companies were founded during the bust. So yes, we're in the bubble now, but as entrepreneurs, my advice, don't be scared. If it's going to be bust, maybe it's your chance to build the next Google.
Well, that's very true, because even if we hit a bust, which we inevitably will, the good news is we always come out of it. It just takes longer or shorter.
Okay, so John and Stas, really appreciate your sharing. So ladies and gentlemen, please join me to thank you, appreciate John and Stas. Thank you.
Thank you.
Thank you.